Hey everybody, Economic Ninja here. I hope you're doing well. We're going to talk about wealth destruction and talk about the psychology of the investor right now in America and even in the world, because I've heard some really interesting things lately. I have talked to people that I know that have 401ks and they have retirement plans, but really some of these companies, well, let me explain something. Defined benefits. Defined benefits is a type of retirement that used to exist that does not anymore. Now we have what's called defined contribution. Defined benefits were when you would go to work for a company and they would say, you work this long, you make this much. When you retire, you will make X. That's it. It's defined. We know how much the benefits you're going to make when you retire. It switched in the early 90s, late 80s, around that time. Really start these defined contribution plans, and then slowly other companies and industry picked them up. Whereas it's either a smaller portion, a much smaller pension plan, and more largely affected by how much you put into a retirement plan, right? Where the company will give benefits on your behalf, match some of your benefits, and then the rest is up to you, right? And now we really see a lot of companies going with just straight matching programs, no pension at all. It's like, here, look, we'll offer you access into this 401k or any certain types of retirement instruments, and we'll do a matching program, but really most of it's up to you. Like 80% of the contributions, or even more than that, are going to be up to you, right? So I've been talking to people lately because of this stock market downturn, and the title of this story that I'm just going to hit a couple bullet points, and I'll link it below. It's entitled "Americans Have Lost 20 Trillion Since the Start of 2022," and the psychology is turning around. I talk to people and they don't really want to talk about it because they all have that gut feeling that something's wrong. Because now we're entering a bear market phase, right? We're hitting 20% correction, the S&P, Dow Jones, Nasdaq, everything's been getting hit really hard. And so people are going to their 401ks, or their IRAs, or their Roth IRAs, and they're literally seeing that they are 20, even sometimes 25% what they were worth in January. And that is having a profound psychological effect on people. And so what that does is that causes them to contract in their spending. It's so much easier to make that decision to go out to eat, go out to breakfast or lunch or dinner when you got $1 million in the bank. Or let's just say a lot of these people don't have $1 million. But I noticed somebody that's retiring, and it sounds interesting. I've been warning this one person for a long time. Hey, you should do things. About 5 years ago, you should do this or you should do that to protect yourself. And obviously he just mocked and laughed. But the point is that he turned around and looked the other day, and his retirement is literally worth 25% less. And so what is that doing? And you can see that people are very confused on what to do. They don't know exactly. Let me adjust this camera here just a little bit. Sorry. They don't know what to make of it. It's that whole like buy the dip. Oh, next month it'll be okay. Let's just do a little bit better. We'll work a little harder. I'll contribute a little bit more. Hey, I'm buying shares cheaper. But I want to remind people that in the last 22 years, the Dow Jones has lost 50% of its worth twice. Think about that. In early 2000s, around 2000, 2001, we saw between the dot-com bust and 9/11, the Dow Jones fell 50%. Fell from like 12,000 and change down to 6. Then it recovered, and around 2007 it started a downturn, and it went from like, I don't know, 13 to 14,000 and change down to like $7,600, 7,200, something like that. My point being is that it lost 50% of its value. Now, if you would have been somebody that was retiring anytime around there, you would have taken a massive blow on your funds. I had this happen to a neighbor of mine that I told you about when they retired. Saved up $1 million in their annuity. By the time they retired, it was worth half. They were forced to go and work as a school janitor and school secretary. Not that there's anything wrong with that, but there is when you have planned for retirement and you thought you had everything set up, right? Now think about it. I told you that story where they had to go back because for every dollar they pulled out, it was like in their minds they were pulling out $2. So they couldn't see that loss, so they had to go back to school and work. They worked for an additional 10 years and they just retired about 2 years ago, I want to say. My point being is they felt this wealth effect for the last 2 years, everything going up, their annuity, they're probably pretty stoked. Now how are they feeling? It's starting to dip again. And most people are just lying to themselves if they think this can't happen again. If you think about those 250% drops, boom, and then boom, and now literally, if you look at a chart, a 22-year chart, let's say the Dow Jones, it's up here. and it's just a little tipping. Now, I'm not saying it's going to happen tomorrow. What I'm saying is the likelihood of the Dow Jones falling another 50% or even more, greater. And don't listen to me. There are guys that are much smarter than me that are out there calling for an 80% reversal in the S&P 500, which would obviously take down the Dow Jones with it. Those are very accurate, I believe. If you look at history, this is what happens when economies reset. And that word reset's been thrown around a lot lately because some of this reset is forced. Another part of this reset is just naturally occurring every 7 to 10 years. Then you have bigger cycles every 50 and 100 years. And I want to remind people, this is the first time in 50 years that the bond market and the stock market have corrected at the same time. Normally, it's one goes up and the other one's as it's going down, and then vice versa, okay? So I want people to understand that. Now, it says right here, since the start of the year, the S&P 500 index is down 18%. The NASDAQ 100 has lost 27%, and the Bloomberg index of cryptocurrencies has plunged 48%. That all amounts to a wealth shock that is set to drag on the growth of the economy in the coming year, and that is absolutely correct. You're already seeing it with disposable income shrinking. You're seeing it with things like subscription services. We talked about Netflix. We talked about freight. We are now seeing travel and leisure getting hit. There are going to be some deals, but I think the really big deals come after most of the people find out. As of right now, I still think it's only like 20% of the world really cares about inflation, is doing anything about it at all, like literally buying a few extra canned goods. The masses haven't truly figured it out yet. And I know that because I still go to dinner parties and I still go, walk around town. I talk to business owners. I chat them up all the time. I don't really care to talk about Little League soccer right now. I care about saving money so that my kids can not only play soccer, but have a future for themselves. And I don't mean to be that bleak, but this is a big correction that's happening right now. This is a big one. Worldwide. These are worldwide currencies failing everywhere. This is big. And so I look at it like, what are we going to do today to not only save ourselves for better opportunities tomorrow, but be able to make the biggest impact in this world? And I think that's what's really, really important here. If you consider the small things that you do today, like buy a little extra food, get out of debt, right? There's a lot of credit card debt right now. Guys, we're in massive amounts of credit card debt and student loan debt. And if you think for a second that they're going to forgive it, that's all a lie, because that is literally the largest asset the government has, getting paid from student debts. So consider that when they're lying and baiting people on the news, like, hey, we're thinking about it, I'm considering it, I'm gonna forgive some loan debt. No, they're not. That would bankrupt the government. That is their largest asset on the books. So remember that when you're being lied to. It would be nice for a lot of people, but for a lot of people it wouldn't be nice. It'd probably cause some rioting, to be honest with you. So I want you guys to consider that. Just think about paying off some debt, getting some extra food, getting inflation hedges. Go down to the pawn shop and buy a couple silver dimes. If you don't own a silver dime, this isn't investment advice, this is life advice. If you can't pull the trigger on a $2.50 silver dime and go put it away, you've got big issues. I'm not joking. Put down the Starbucks cup, start drinking McDonald's coffee, or you know what I mean, like change something and save $2.50 and go put a silver dime away. Our nation is in trouble, and it's in trouble because it can't save money. I hope this reached somebody. I hope you guys have an awesome day. I'll link the story below. The Economic Ninja is out.